Hey everyone, I want to revisit the conversation about recession risks. No, I haven't changed my outlook, but I do want to highlight something someone asked that I think is particularly salient to commercial real estate investors. Will the next recession substantively affect commercial real estate returns? To lay the foundation, I want to point out that there's an open debate about when the next recession will be. Within 2 years, within 1 year, within 6 months, or are we already in one and just don't know it yet? I've heard all of these timelines voiced, and each has some validity. It's hard to say if or when the next recession will be because there's a wide range of economic crosscurrents in play. That makes it very difficult to predict. On one hand, job creation is robust. We've been adding an average of 488,000 jobs per month this year. In addition, unemployment is exceptionally low, just 3.6%. Wage growth is strong, about 5.2%. Retail sales have flattened recently, but they're still up almost 8% compared to last year. Those are all positive economic readings pointing to a steady growth outlook. On the other hand, we have exceptionally high 8.5% inflation, rising interest rates, a falling stock market, and falling confidence levels. In many ways, there's a fear factor coming into play that could cause people to slow their spending, and that could induce a recession. Yes, the risks are rising, but a recession is not a foregone conclusion. So bearing that in mind, the question someone asked was, for commercial real estate, does it really matter if we have a recession? A big part of the answer depends on what kind of recession we have. The pandemic recession hit parts of the economy and some types of commercial real estate really hard, but hopefully we won't have another global health crisis again, ever. The Great Recession in 2009, that involved a severe liquidity crunch that curtailed commercial real estate investment. But again, that kind of recession is improbable this time. There are a lot of other recession causes and effects, but we're likely looking at a recession along the lines of the ones in 1981 or 1990. Both of those recessions were preceded by strong growth together with rising inflation that pushed the Federal Reserve to respond with assertive interest rate hikes. These were basically Fed-induced recessions. If you look at those two recessions on the CRE Total Return Index, you'll note that yields softened, but nothing like the decline of 2009. There's also a lot of variance by property type. Apartments held up well through the 80s, then dipped mildly negative in 1991. Nothing like the hit the sector took in 2009. Retail was affected similarly, although the downward pressure was a bit more pronounced than apartments. In the 1981 recession, office returns dipped, but they remained positive. The effect of the 91 recession were more substantial. Industrials saw similar effects, but over the last couple years, industrial has taken off like a rocket. I think the industrial paradigm has changed. So back to the question. If a recession comes, how much risk do commercial real estate investors really face? A lot will depend on the asset and the location, as always, but in general, real estate has delivered positive returns through most recessions. And even when returns dipped, it was usually followed by strong, steady growth. So yes, recessions matter to commercial real estate, but not nearly as much as people may think. At the end of the day, the big question is how a recession will affect the space demand for different property types and for different markets. From a broad brush perspective, investors shouldn't be afraid of an impending recession. Consider the long-term nature of commercial real estate and what the economic climate will look like over the hold time, in 3 years, in 5 years, in 10 years. Then make your decision while you keep your eyes on the horizon.